What is gap insurance? When you buy a new car, the last thing you want is to get into an accident. But even the most vigilant drivers can find themselves with a totaled car, whether they were responsible for the incident or another driver caused it. One of the first thing to do after such an accident is to file a claim with your car insurance provider. But what if you owe more on your loan than the amount your insurer will pay out for your totaled car? What That is where gap general assessed protection insurance comes into play. This optional coverage helps bridge the gap between your car value and the amount you owe on your loan. Without gap insurance, you had be responsible for paying off your car loan even though your car is no longer drivable. Pros and cons of gap insurance. Just like any type of insurance coverage, gap insurance has its pros and cons. Below are the most common pros and cons. Pros: no deductible. Cons: additional cost, additional financial pros: additional financial protection. Benefits: zero deductible. Unlike collision or comprehensive insurance, gap insurance does not have a deductible. That means you shall be paid the full claim amount once approved rather than having to pay a portion of the claim out of pocket. Financial protection. Gap insurance provides extra financial protection if your car is stolen or involved in a serious accident that deems it a total loss. Rather than paying your outstanding loan balance out of pocket, either with savings or by continuing to make payments on a car you no longer have, gap insurance will pay the difference between your car insurance payout and the amount you still owe your auto lender. Consideration: vehicle depreciation. When you buy a new car, depreciation begins as soon as you drive off the lot. Kelley Blue Book reports that the average new car loses 20% of its value within the first year and 60% of its value within 5 years. This makes gap insurance an important consideration if you are buying a new car and plan on taking out a loan to finance the majority of the purchase. Cost: gap insurance adds an extra cost to car ownership, whether you buy a policy from the dealership at the same time you buy your car or purchase a policy from an insurance company. You shall be paying more than you would if you skipped the gap insurance coverage. However, if your car is stolen or totaled, that additional cost will prove to be money well spent. How does gap insurance work? Gap insurance work. Gap insurance kicks in if your car is involved in an incident in which the insurance company deems it totaled and your car value as determined by the insurer is less than what you owe on your car loan. When a car is deemed totaled, the insurer will send an assessor to determine its actual cash value. That's the amount your car insurance will pay you in exchange for your vehicle. You can then use that money to purchase a replacement vehicle. But if the value of your car is less than your outstanding loan amount, you shall be repaying a loan on a car you no longer have. Gap insurance helps cover the difference between the car actual cash value and your outstanding loan balance. So if you owe $10,000 and your car value is $5,000, gap insurance will help cover that extra $5,000, so you don't have to pay out of pocket. What is and is not covered by gap insurance? Before deciding whether or not to purchase gap insurance, it's important to understand exactly what is and is not covered. Make sure to ask yourself the following: what does gap insurance cover? As mentioned above, if your car is totaled or stolen, gap insurance covers the difference between your outstanding loan amount and the value of your car as determined by your insurer. What does gap insurance not cover?